Hey everyone, Chris over at Thrive Financial here. Just wanted to hop on today and show you a little bit about special insurance and how can it affect the purchase of a home. So I'm gonna go ahead and share my screen here and kind of chat with you guys about two different kinds of special insurance and how it can affect your buying power on a home, okay? So first one I wanted to talk about, which is becoming more and more common here in Orange County, is special fire zones, okay? So what I have up here in front of me that I'm showing you is a fire map by CAL FIRE. And this is going to show the special high fire zones. Now you're going to notice most of these are in North Orange County. So over here, we'll try and zoom in a little bit. You've got, Villa Park right here. You've got Orange over here, Yorba Linda. So you'll notice north of Yorba Linda, this area over here is Anaheim Hills. You've got like Brea, La Habra up here are all starting to become high fire zones. Okay, it's like Orange Park Acres over here. This is just south of Silverado, areas close to Irvine. So now in these high fire zones, most insurance companies are now not writing. They're refusing to write policies in these areas. Now, that doesn't mean that you can't get insurance, but it means you're going to end up getting what's called a California Fair Plan policy, which covers the high fire zones. And then you're going to need a second policy, generally called a wrap policy, for your standard insurance coverages, liability, and things like that. So what does this mean when you're purchasing a home, or for my agents, if you've got a listing or you've got a buyer looking in high fire zones? There's also a few down here in South Orange County. You'll see around Newport Beach, Laguna area. So keep in mind there. Again, you can find these on the CAL FIRE website to see the map. For agents, you'll also get on your NHD report, your natural hazard report, when you order that for a new listing. So what this means is cost of insurance for your buyer is much more expensive. Same thing with like Melrose or special assessments, and it's going to affect their purchasing power on a home. So if you go over here and look at, some ballpark monthly payments, your standard home in Orange County right now, let's just say it's about $1 million. This is just for illustrations. Borrower's putting 20% down. So if you're buying a home at $1 million at 20% down, your standard homeowner's insurance is going to be about $125 a month. Okay. That's pretty standard in Orange County. 125 times 12, it's an annual policy of about $1,500. If you're in one of these high fire zones or a flood zone, which I'll show you next, it's going to about double the cost of your insurance. Okay. It's a ballpark estimate, but you can talk to insurance agents and they're going to give you similar information. So right now on this $1 million purchase at 20% down to 7% rate, you may be able to get better than that today, but this is just for illustration purposes. Total monthly payments about $64.80 a month. So if we go with a high fire zone policy or a flood policy, we're going to have about a $3,000 a year annual premium instead of a $1,500 a month annual premium. So what that means is your total monthly insurance cost goes from $125 to $250. You've now doubled your insurance cost. Our payments now hopped up to $66.14. In order to get that same payment we were at before, we're going to have to lower our purchase price by $20,000 or pay the additional $125 a month if your clients can afford it, meaning that gets us back to that same payment. So if you're in a high fire zone or a flood zone, essentially on a $1 million purchase at current interest rates, it's going to hurt you by about $20,000 in buying power, or you're just going to have to eat it and pay the additional insurance cost. Where this is really going to affect clients is clients that are on borderline qualification, right? We've really stretched their debt to income ratios to get them to that $1 million sales price. All of a sudden they find a home they're in love with, but oh no, it's in a fire zone or it's in a flood zone. So really important for buyers that are out there that you're looking at, am I in a fire zone? Am I in a flood zone? Again, fire zones are going to be mostly North Orange County, up there in that Yorba Linda, Brea, Anaheim Hills area, a little bit in Irvine, and then down South County around Newport Beach, Laguna Beach area. For the flood zones, they're pretty much all coastal right now. So that's the good news. You'll see Seal Beach here. You'll see Newport Beach, you'll see Huntington Beach, you'll see Dana Point area. So this is from San Diego all the way to LA. You'll notice all these special flood zones are essentially just coastal. So keep in mind, if you're out there shopping for a home right now, to be conscious of high fire zones and flood zones, these special insurance zones, because they're going to increase your monthly payment. And if you are borderline on qualifying for your loan, it could actually push you from qualified to not qualified. That, combined with how fast interest rates are moving in the current market, super important to keep an eye on whether you're in one of these high fire zones, one of these flood zones. For agents, if you're listing a property, I highly suggest you put in the agent agent's comments. It's the same thing with Mello-Roos or special assessment. That way, buyers that are potentially writing offers on your properties know up front, because you should be ordering that NHD when you get to take a listing. You know if you're in a flood zone or a high fire zone, put that in your agent remarks on the MLS listing. Make sure that potential buyers know they're in that high insurance cost zone and that it could affect their qualification. So short video today, just wanted to hop on here, make people aware of these high fire zones and flood zones and how it could affect their monthly payment and possibly even their qualification for a loan. If you have any other questions, feel free to give me a call. Chris Stearns, Thrive Financial. Thanks.